Hey, Lauren at Aggressive Credit Repair. A friend recently asked me to give him the top 5 credit myths. It had been a while since I had thought about that topic. I committed it to an email, sent it to him, and kept it because it inspired this month's newsletter, the top 5 credit myths. There's a lot of myths, okay? I'll just go over the 5 that I hear the most. And I'll cover the newsletter that I wrote to him. I won't read it word for word, but give you an idea of what it talks about. Myth number 1, and the most popular myth of all: every inquiry hurts credit. No. Take it from me. I have a bunch of inquiries and I have an 830 credit score. Take it from the best borrower in the world, a guy that's got 850, guy or girl. There's plenty of them out there. They all have inquiries, okay? It takes inquiries to make credit. It's a necessary part of building a perfect score, okay? And think of it this way. Inquiries do not dictate your ability to pay back a loan, okay? So the whole conspiracy that inquiries hurt you is really misleading and has a lot to do with denial letters. Whenever people get denied letters, they'll say one of the reasons is because of too many inquiries. Actually, that's just cheap software that throws out a bunch of reasons. You can have nearly over 800 score and it'll still say too many inquiries and say it in plural even if you only have one inquiry. It's just a myth, okay? In fact, if it does hurt your credit, any inquiries, it's usually because there's a bunch of them for different reasons. And after a certain amount of time, if you lose any points for them, they come right back after about a month or two after you've had no inquiries. So huge myth, inquiries aren't that bad. Kind of on the same topic, I bought a new car and my score dropped because of the inquiries. Another huge myth. Your score isn't going to get pounded because of inquiries. In fact, a bunch of inquiries grouped together, they're all grouped together as one because you're not penalized for rate shopping. The scoring model knows if you've got 20 different banks looking at your credit for an auto loan, it's probably because you were just trying to compare good rates. They don't penalize you for that. The scoring model is smarter than that. Okay, in fact, in a short period of time, all those inquiries are grouped as one inquiry. So why would your score drop if you get a new car loan? Well, it has to do with the new car loan. Okay, you haven't proven any payment history on that loan. You owe the full balance on the loan, kind of like a maxed out card. But the real thing is ALOA, average length of open accounts. You have all these accounts have been open for a while. You're building credit as time goes on. In fact, that's the way to 800 is through ALOA, average length of open accounts. Then you open up a new account. Typically will shorten your scores kind of in the short term. Usually after a while, scores will rebound because of something like that. If your score takes a hit if you get a new car loan. I'm not a huge fan of car loans anyways, just because they're short-term loans, but that's another newsletter. Credit builder loans. I get a lot of people asking me about these loans. Is this a good way to build my credit? In fact, I'll have people that join my program, I ask them not to get loans, and then they go out and get a self-builder loan. I heard this is a great way to get a loan. Well, they market it that way. Doesn't necessarily mean that it's great. Again, ALOA, average length of open accounts. I built an 800 score off of only 3 open accounts. One of them was a credit card that had been open 10 years. I wouldn't have been able to do it with little tiny loans. Typically those little, what do they call them, credit builder loans are like short term, 1 year, 2 year. That's no way to build up a huge score. It's also why I don't like car loans. They only last a couple years. I mean, if you get a car loan, it's got a 4 to 6 year term. How many people do you know that last the full 4 to 6 years before they sell that car or refinance it? So credit cards is the best way to build your credit. And it doesn't take a lot. I built my 800 with only 3 open lines of credit, 2 credit cards and a mortgage. Myth number 4, 30% utilization is the best. Is the best credit cards, is the sweet spot in your credit card of 30% utilization. I totally disagree with that. In fact, this month alone, my score dropped 10 points because I went from less than 1% credit card utilization to 1% credit card utilization. So 30% is way higher than that. I actually went over 6% not long ago and I dropped 30 points because of it. Trust me, less is more when it comes to credit card utilization. You're looked at more responsibly the lower you go. Sweet spot for credit cards is just over 0%, less than 1%. I know that sounds weird. The only reason it's not 0% is because some scoring models don't recognize the card as active if it's 0. In fact, if you go too long with 0 balance, the card can be closed for inactivity. We don't want that because we want to build our outlaw up. Last myth. Most people know this though. Pulling my own credit hurts my credit. It's not an inquiry to pull your own credit. And that's it. That concludes this newsletter, this month's newsletter and my video. If you have any questions about it, let me know. Hope to talk soon.